You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by SWAN Global Investments. Since 1997, SWAN has been the leader in hedged equity and option income strategies with GIPS verified results. SWAN provides unique and valuable solutions to the inherent weaknesses of asset allocation, offering defined risk strategies that allow upside participation while also protecting advisors and investors against market risk. For more information about our advisor program for separately managed accounts, SWAN Defined Risk Mutual Funds, or our proprietary option overlay strategies, please contact Randy Swan at swanglobalinvestments.com. Think outside the style box. Think SWAN when deciding on risk management solutions to market risk. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody, that music means it is time once again for the Advisor's Option, the program here on the network where we all gather together to help explain how you, the busy financial advisor or asset manager, how you could come to grips with these sometimes intimidating things known as options and how you can utilize them in your clients' portfolios. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Coming at you again for our final Advisor's Option, I should say, of 2019. We have a lot of fun stuff to get to, and I'm pleased to say a great cast of characters to help me get to it. Let's go all the way out to not quite the far hinterlands of Maine, a little bit closer, a wee bit closer, where we are joined once again by Mr. Matt Amberson, the principal over there at Options Research and Technology Services, a.k.a. ORATS. Mr. Amberson, welcome back to the Advisors Option Program.
It might be snowing here, but I feel warm knowing that Eric COTT is on with us.
Oh, look at you. Look at you giving away spoilers for who's joining us here. All right, he mentioned some person we may or may not name in a little bit. But first, let me get to, you know him, you love him, you write in questions specifically asking for him. Yes, he is the Director of Risk, Mr. Chris Hausman, a.k.a. the Portfolio Manager over there at SWAN Global Investments. Mr. Director of Risk, welcome back to the program to you as well.
Always a pleasure. Good to be on, and welcome Eric, since the spoiler's already out there.
Yes, the spoilers. All right, I was going to save it to the end and build to it, but you guys got ahead of me. So we also are joined. It's our once legally allotted appearance by Mr. Eric COTT joining us for our final year in review episode. You know, he's too busy. He's too busy being the star of his own show to make time for us here on the Advisors Option. But we're glad he did. He is, of course, Mr. Eric COTT, the Director of Advisor Education over there at the OIC. Eric, welcome back to the Advisors Option, sir. It has been too long.
Well, happy holidays to your listeners, Mark. Thank you for having me. Christopher, Matt, always nice to be on with you. And it has been a long time, and obviously a lot going on at OIC, which we'll talk about later, especially, Mark, since you got me involved in this digital outreach. It's been very exciting.
You know what else is exciting is our end of the year episode. So without further ado, let's get into a very special edition of The Buzz.
Busy financial advisors and asset managers don't have time to follow the latest developments from the world of options. So we do it for you. It's time to get the buzz.
All right, everybody, welcome to The Buzz end of the year wrap-up edition. It's a fun one. We have a lot to parse, a lot to analyze, a lot to look back on, and indeed a lot to look forward to as well. But let's start looking in the rearview mirror. If you've been listening to the show for some time, you know this is the time of year when we tend to do a little bit of predicting on the program as well. So we thought we'd go back and check in with our predictions from this show exactly a year ago for what we thought would unfold in the options market and the volatility space, and indeed the industry overall for 2019. I think we're ready to start. Let's start with the Director of Risk. Mr. Director of Risk, are you ready to hear your prediction for 2019, sir?
Absolutely.
All right, let's do it then.
I think you're going to see other components that make up volatility move very quickly. Case in point with the skew. That's right, I said skew. It was very, very steep for many, many years. That's all we ever talked about because that was the natural trade, right? Sell put spread, buy call spread. And what we've seen over the last month or so is the complete opposite, where people are now selling call spread, buying put spread, right? They're just rolling the structure down because that's what the market has been doing. And, you know, the sell-off that we've been experiencing, even though they're large, a lot of people are, you know, getting somewhat nervous. It's still kind of been structural. I mean, it hasn't been this February downdraft or what we had in August of 2015, where it was very violent and vicious, and then we recovered very quickly. This almost feels very structural. This is what a bear market is, and this is one of the reasons why you're not seeing the VIX explode. And there's, you know, how come the VIX isn't 30, 35, 40? Well, because the realized volatility in the way the market's moving right now is just a nice stair step down. But what we're going to see the changes are very quickly are in other risk metrics like skew. I was very shocked how it went from so steep to basically 0 percentile now. So I think that those components are going to move a lot quicker in the future, and the VIX is actually going to be a lot more stable product.
Interesting breakdown there, sir. So kind of just to put it in context, by the way, listeners, when we did this towards the middle of pretty much exactly a year ago, we were in a different environment. We were facing a little bit more elevated volatility, and also we were about to come into the teeth of pretty much the big sell-off, for one of the big sell-offs for the year. There were several last year, but the final one, certainly the nadir for the broad market. So an interesting time frame from that perspective. What do you think, Mr. Director of Risk, about your prognostication? You think you knocked it out of the park? How do you think you did?
Well, the first two takeaways is I need to be careful what I say on this show since it's being recorded. And I didn't know I talk so much. Usually everyone says I never say anything. So, but going back, I'm going to say I nailed it again. So that makes me I'm 2-0, aren't I? That means 2 stakes, right? For someone else that's listening on the show right now. I think it's going to be more of the same. Are you ready for this year's, or are we going to get through all of 19, go back, and then see what we say for the upcoming year?
No, we have to save that for a little bit. But yeah, I think interesting, predicting more of the velocity of the components of risk, whereas not so much VIX itself, which you thought would be relatively stable. And we did kind of see some of that, I think. So maybe, I don't know, I'll put it out to Matt. I'll let him be the arbiter because, as you mentioned, he may indeed be owing you multiple delicious meat products soon. Mr. Matt, what do you think of the director of risk prognostication? Think you hit it out of the park, or a double or triple, or do you think he struck out?
No, I think that the skew is moving a lot faster. I think that there's a lot more automated trading, and they do a lot of research, and they're moving the skew. It's very steep right now. It was very shallow back then. I think Chris did a great job as usual.
All right, Mr. Eric, you have to be our arbiter here. How do you think the director of risk did with his prediction, sir?
I think Chris did a great job. And listen, what the I think gives him a gap to make these predictions. When you're in warm weather, it allows you to see things a lot more clear.
Yes, he doesn't have the issues of digging out of snow. Of course, they do have some weather-related issues around the summer period, so they're not completely immune out there. So I guess, Mr. Director of Risk, they're being pretty charitable to your prediction. I was going to give you more of maybe a double, but it sounds like they're leaning more towards, let's say, a triple. So I'll think, okay, let's say, I guess we'll put you in the plus column there for that one. I also should mention we had our buddy, Mr. John Cherry from Northern Trust on the show with us last year. He predicted that VIX and VIX futures would remain in an above-average range due to the news coming out of Washington. As a result, he thought increased volatility, potential start of recession, and the Fed raising rates, all three of those things would in turn drive up options volume. Didn't really see pretty much any of that playing out for the most part. Some of that, maybe to a degree, but I'm going to have to put that one on more of the bunt cat. I've already given him a hard time via email, so he'll have to come back on to defend himself soon. All right, Mr. Matt, are you ready for your prognostication, sir?
I didn't know you were recording these shows, Mark.
It's amazing how this technology thing works. All right, here we go. Mr. Matt's 2019 prognostication, please. Producer.
Well, I have a pretty good indicator, Mark. We recently purchased a house, so I'm sure we'll see the real estate market tank. So, that's what I'm looking forward to in 2019. But, all joking aside, it still looks like the market's going to be pretty volatile, according to all our numbers. I've figured out that ORATs and our technicals are a little more shorter term, and Chris is a little bit better longer term. So I'm not going to make any more long term bets with Chris. So I'm going to leave it to his prognostications.
So you predicted a little bit more vol in the shorter term, which is kind of what we saw, and then you kind of punted a little bit on the longer term prognostications. So how do you think you did, Mr. Matt?
Well, that's exactly right. You always defer to Chris on the longer term, and we saw in the next week after that the market just went straight down in the Christmas Eve schmundering, and so I don't know, pretty short term, but I admit it was a pretty wimpy prognostication though.
There was a little bit of a political answer on your front, but to be charitable in the near term, you knocked it out of the park. And about a week after the show, when we saw the great nadir of Christmas Eve, you looked like a genius there, sir. So well done even if you did kind of cheese out on the rest. Mr. Director of Risk, what do you think here about Matt's prognostication?
I thought he was spot on with everything he said. I mean, I'm not sure about the real estate market, but everything else was pretty good.
Oh, yeah, the real estate bubble. You did kind of drop that one as well. You guys are being way too shared. I thought you'd be at each other. Okay, Eric, help me out here. What do you think about Matt's, shall we say, political guess for 2019?
Well, I'm gonna balance it out with Matt and wonder if he did refinance a couple of times in 2019 and paid off the house, and now he's buying a second one down in the warmer weather. Is that the delta that I'm predicting, that there's a second house maybe in the cards for 2020 for Matt's family?
Oh, there you go.
It would be down in Puerto Rico, but I should say this, that the market was up 27% or thereabouts, and real estate was up 15%. So, about.
Yeah, that's true.
I don't know if that's tanking. Relative outperformance, maybe, if you had said that. So I'm gonna put Matt in I'll give you a single, because you did well, let's say, through January. So you did well through that. And that's kind of all you predicted. So I guess in that sense, maybe. Listeners, I'll let you guys weigh in on what you think. Let's look back now on what unfolded for us. Obviously, there were a lot of big narratives, a lot of big stories, a lot of big developments when it came to the world of options, particularly through the lens of how it applies to advisors. There were a lot of things going on. Eric, you haven't been on in a little while, so I'll give you pride of place. As you were traveling hither and yon over the course of the past year, talking with advisors, going to conferences, getting their feedback, looking at the space yourself. Of course, in addition to now hosting your own show, so you get to see what I put up with on a regular basis. But that's a conversation for another day. What big stories, what big developments, what big trends for the advisor or the option-oriented advisor space really resonated with you in 2019, sir?
Well, a couple of things. One is we were able to get Chris Hausman to come up to Florida this past May for the OIC conference.
That's a big deal. He doesn't leave Puerto Rico very often.
That was a huge deal from Puerto Rico. I was able to get Matt on a panel, which was a wonderful experience for me. We really had a great time talking about the entrepreneurial spirit of the options world, and that was great, and I got to share time with you, Mark. So we had a very successful conference at OIC in May, but I think one of the takeaways from this year, not only did you get me involved, Mark, in the Coffee with COTT podcast, we are going to record our last one next week, so we will have had 6 for this year. We've had other digital outreach, but I think we're all aware of what happened in the last sort of 30 to 45 days, which was a announcement by Schwab and TD Ameritrade and this new landscape of zero commissions and advisors sort of digesting that and seeing how that's going to play out, especially in the RIA space, and now as it's found its way into the broker-dealer space. But from all of the travels and such, I think that starting the year off, and I'm glad that I didn't make a prediction in 2018 because I would have been way off. I probably would have foul-balled a couple of times, and you would have called me out on that. But I would have expected maybe more volatility coming from a lot of the headwinds in Washington and such, Mark. But, look, we started off the year, and then here we are now with another record year, and advisors, I think, are anticipating, at least what I'm hearing in the field, that with an election year and all the major indexes in the positive category, that they'll see more of that going into next year. So I think it's a little bit of defensive, but it's also they're still concerned about income strategies. And the other thing I'd mention is that we're seeing a lot of interest still on the sub-advisor side. Many asset managers out there across the country have entertained the idea of bringing new strategies to the advisor community. And, we're seeing that whether it be in ETFs or in the 40X space.
I'm curious because we haven't had you on since this, let's call it the commission wars, for lack of a better term, since this commission wars really went into high gear. That was going to be one of my stories I mentioned here. Clearly, it dominated a lot of the mind share, a lot of the market share in the advisor space and the retail space, pretty much across this aspect of the market for the latter portion here of 2019. So that's definitely in one of my top stories, if not the top, for this audience for 2019. I'm curious for you, though, Eric, as you've been out there, boots on the ground, talking to these advisors. You obviously brought it up, so it obviously resonated with them as well. What are you hearing from them in regard to this? Obviously, it was a little bit of a different beast with options. Options not quite free, but reduced cost, no more ticket charge, and down to about 65 cents a contract. So still a cost, and still a fairly substantial one, but not quite as substantial as it used to be. What are you hearing in regards to that from advisors? Are they excited? Options flow from them, from their clients? Are they kind of a little bit nervous? What are you hearing in regard to this, Eric?
I don't know if it's nervous, Mark. I mean, I think that we've all, Chris and Matt, you and I, we've seen this in the environment where you have a lot more of this sort of fintech environment. You have firms out in Silicon Valley, you have firms in the East Coast, really down in the Southwest that are offering these strategies or at least solutions to millennials where they could be doing trading at potentially a zero cost. So I think this was a reaction from the RIA business, especially the larger firms, to sort of say, look, we want a more competitive landscape, and if we're seeing some of this business go to someone else, that we just want to change the model that we have. So I think the overall consensus from the advisor is that they're not necessarily nervous about it. I think that what they're seeing is that the clients that they're working with are absolutely much more sophisticated and are conscious of what it costs for service. And if they're providing a value added and they're going above and beyond the normal sort of 60-40 conversation, and there are other things that they're delivering to their clients along with solutions, Mark, that are option based, then clients are not really that concerned, I guess, about the cost.
All right, Mr. Matt, same question for you, sir. What stories, what trends, what developments in the options-oriented advisor space and indeed the broad option space as a whole really stuck out for you in 2019, sir?
Well, yeah, you have to agree with Eric on the zero commissions. And I think it's going to be interesting, though, the Schwab TD Ameritrade. Are they going to face some antitrust issues? Schwab lowered the commissions first, and then they took over someone that was very vulnerable to commission. So I thought that's going to be, or I think that's going to be an interesting one to watch, and it was a very interesting occurrence out there. We work quite a bit with advisors, and we do programming for them, scanning for them, helping them with implementation and back testing, of course, and data. And we hear quite a bit, and I'm surprised how bullish people still are. We're here at dizzying heights in the market, but they're still very bullish, and it's tough to talk hedging to them as well. So that's a little worrisome. But I am actually starting to hear some people talk about hedging, so I'm encouraged about that. But the overriding, we still hear quite a bit about covered call strategies, but now we're starting to hear a little bit more about hedging, but they're still quite bullish out there, Mark.
Yeah, what could possibly be wrong with that sentiment, right? All you are is just loaded up bullish, and what could possibly go wrong? But you're right, a lot of the quote unquote known unknowns that were lurking out there, like the trade wars, seem like they're potentially in the process of being figured out, in which case, outside of the election next year, you're right, there aren't a lot of immediate things that come to mind that could really derail. I mean, if this bull market could survive a massive over year-long trade war and all the other systemic shocks it suffered over the course of the past year and change, with Brexit still ongoing, everything else like that, it does seem like the bulls, it's going to be hard to dissuade them now that in a year where there isn't really a lot on the calendar outside of the election, that something could come along to really derail this bull that has survived so much. That said, Mr. Director of Risk, sir, looking back over the full breadth of 2019, what really stood out for you? What resonated to you, sir?
Probably a couple of things. I mean, it's good that the options-based category continues to grow as a whole with assets under management. That's promising and a testament to the industry and the education, and then guys like Eric and Matt and yourself getting this education out there in the hands of RIAs and people that haven't been using these products, and now it's becoming more and more mainstream. And I think the other thing that you probably guys have seen maybe is that technical analysis is no match for Trump's tweets. So that's been an added challenge this year of trying to play that game, and the only way you can do it is by having longer-term structures in place that are hedged, even though it really hasn't worked out this past year, just for short-term type of events. But yeah, I think as far as the bullish sentiment is concerned, that's going to probably carry over here in the early 2020.
I like that. Technical analysis is no match for Trump's tweets, because you're right. You could do all of the legwork you want, and then an errant tweet out of Washington could derail the whole thing. So yeah, that certainly must be frustrating. I'm sure it still is for a lot of our audience out there. A few stories resonated to me and really came to mind as I was looking back over the breadth of 2019. What a crazy year it was. In our predictions, you guys were talking a lot about volatility, so maybe we'll start there. People tend to forget now that we're, the trade war maybe potentially seemingly behind us. We're heading into the holiday season. Volatility, it's doing its usual seasonal thing of coming off or getting down into the low teens. Maybe, who knows, maybe soon to be threatening single digits. People in this environment forget that when we kicked off the year, we were coming off the heels of this big sell-off right on Christmas Eve. In a traditional time when the market usually doesn't do a heck of a lot, it sold off really hard. And pretty much every major name out there really hit its low for the year right around that period. So we entered the year just ablaze with volatility. We're at about a 25 in the VIX, which seems outlandishly high now in comparison, pretty much double where we are right now. But that's where we were at the start of the year. And then volatility never really looked back at those levels. We had a couple of moments where we threatened it 25 very briefly in August again when all this rhetoric was heating up. But outside of that, it never really threatened those levels again. So we kind of started the year with a bang, and at least as we're coming into the middle point here of December, so far, we appear to be ending the year on a whimper from a vol perspective. Again, the year's not over, and we could see a replay of last year on December 24th and a huge vol explosion. But as of right now, that doesn't appear to be the case. That's one of the narratives that we saw, and that was also a very sharp contrast to 2018 when it was all volatility all the time. That year was marked by multiple systemic shocks that really drove a lot of volatility. We had the VIX-ocalypse, of course. We had the big sell-off in October, and then, of course, the Christmas Eve sell-off as well. So there were multiple shocks that really drove volatility and also volume. 2018 was a record volume year, remember, and so far, at least, unless there's some crazy development in the final weeks, it seems like 2019 not going to match that level. Not surprising to me. It does seem like it was surprising to a lot of industry folks. I remember, in fact, when most of us, Matt and others, were all gathered together at a panel at the beginning of the year in January at the STAC conference. I had you all on a panel with me, and I polled you guys, I polled the audience there in the room, and everyone, to a person, was very bullish on volume for 2019. They thought it was going to beat 2018, perhaps forgetting that 2018 had a lot of statistical outliers that drove a lot of that volume. That appears to be the case. There were over 5 billion options contracts cleared in 2018 by our friends over there in OCC land. Doesn't seem like we're on pace to hit that. The latest numbers coming through for November show ADV right around about 5% below that level for 2019. So still a very active year, and you take that 2018 outlier out, and it's a pretty strong, probably a record year. But compared to 2018, and again, it did seem like that was probably how it was going to play out. But a lot of people in the business as well were very bullish on volume, which surprised me. And again, maybe just a little optimism built in there. Also, a couple other things that stood out to me. Looking back at how you guys respond and your feedback and everything, you guys still love your income strategies. In fact, one of the episodes we did breaking down various ways to use options for income, whether it's short puts, whether, of course, for covered calls. You guys all love covered calls. Even things like covered combos, a little more exotic, and collars, you guys eat all that stuff up. So for the advisor audience, income is still key, and you guys still love that. Another thing I noted, which is probably a positive headline, a positive development for 2019, really is that, remember, we came out the heels of 2018. In fact, when we did this show exactly last year, if you listen to the rest of that show I was playing earlier from last year, we talked a lot about a huge fund that had just blown up, making a lot of, maybe not a huge fund, but a huge story that blew up. The Journal was running it. It was the Option Sellers Fund. And that marked the end of a year where we saw a lot of big funds blowing up because of poor risk controls in the option space. We didn't see as many of those in 2019, which I think is a good development for the option space. In fact, I'm looking here, and I happen to see the list of the Pinnacle Award winners for Best Option Strategy and Fund for 2017. And it was LJM Partners. And guess what? That link is no longer active anymore because they blew up a month or two into 2018. So we like to see funds with good risk control. That's why we talk about it all the time here on this show. And we like to see fewer stories on this end that are dominating the headline. Mr. Chris, is that a trend you look favorably upon as well? The fewer options-oriented funds blowing out in 2019, sir?
I definitely think so, but I do think there could be some consolidation in that group, just some strategies that aren't getting, bandwidth. There are certain strategies that did have a hard time in 2018, like you mentioned. There's definitely we see a decrease in the use of leverage, right? That's one of the biggest culprits for an options type of strategy to not work during those times of stress. But, the other thing I wanted to add about last year is we did have some good volatility for 8 to 9 months. And as soon as the central bank came out and went into another round of quantitative easing, the markets rallied, and then volatility just got the rug pulled out of it. It's not as low as 2017 because I am in the camp now that was an outlier, and I don't think we're going to see that type of low volatility for that long a period. But it's just amazing how central bank easing Trump pumping, and we also have to throw in there, how much of the call overriding is also having an effect when the markets do start rallying. All these people start covering calls and rolling them out, and then you've got dealers that have to buy deltas, and that's also, pumping the market up to some degree. So, those are the three things that I see that this bull market is still going on. Is again, it's as long as the central bank's out there and they're willing to ease, that's a tough one to fight. That has been a losing battle to fight for the last 10 years, and I understand when people are saying, well, I'm never going to buy a hedge ever again because of that. The Fed put is deeply entrenched in our system right now. And then, of course, the Trump pumping, like I mentioned, and then we'll see how much impact the call overriders really have in making this bull market a self-fulfilling prophecy.
Yeah, the Fed put. Why buy your own puts when the Fed's got one in there for you out there? Well, Mr. Matt, I would be remiss. So, by the way, you mentioned 2017, Chris, before I get to that. 2017, you're right. What an outlier year that was. If there was one year where every single person on this network, guests, regulars, myself, everyone we talked to got the predictions wrong, it was for 2017, because to a person, when they came on this network to predict what volatility would do for 2017, that was, of course, the year Trump was inaugurated. Everyone to a person said there's one thing we could rely on with Trump, is that he is not a single-digit VIX president. Pretty much everyone said something along those lines. And what did we see? We saw exactly the opposite play out in the market. I don't think I could have been more surprised. I don't think a lot of our audience, a lot of our contributors could have been more surprised. So everyone got that one wrong. 2018, a bit of more of a return to what people expected, I think, from the Trump administration. But still, interesting stuff out there. Speaking of interesting stuff, Mr. Matt, you are the keeper of all things earnings data for us here on the show, so I'd be remiss if I didn't give you an opportunity to look back also through that lens of earnings. What really stood out to you? Maybe some trends, some overall narratives, how it played out, surprises. What resonated to you and your team this year from an earnings analysis perspective, sir?
Yeah, as you know, we look at earnings. We look at the 6 weeks kind of following the businesses closing their books for the quarter, and we run the numbers on each one of those weeks. So it's been very interesting. The last earnings move report came out, and we just had a snoozer of the first week. And the first week is when the bigger companies come out, so that's usually the worst in terms of returns. And then later, as you get into the fourth and fifth week, we predicted that it would get a lot busier and a lot better for option owners, and it did. And then it kind of petered out again. That was this last earnings move. As you know, it's January, April, July, and October when the earnings moves come out. The July's season was quite active. We had even the first weeks were big, and so we saw that week was big, and the other weeks were above average as well, and that kind of bled into a higher implied earnings moves for this past earnings season. And then the first two, there weren't much of note. Usually it's about 35 to 40% winners. This is in August, or the July, August, we had the first over 40 winners of meaning if you own options, if it paid off. So that's how I'd look at the earnings season. And, coming up, I think January has always been interesting. It's the year end, and I actually think that earnings the expectations are going to be too high. So that's my prediction for January. And then just to talk about volatility, realized volatility. So we do and this is just for the S&P 500. So this year came in at about 14. When we were talking last year, the implied was anywhere from 17 to 19. So that came in a little lower. As you mentioned, 2018 was about a 17 vol for the 252 days. And I think what was interesting, though, is we also look at a different measurement of volatility, more intraday volatility, and that in 2018 was higher than the close to close, so to speak. This year it's the same, but 2018 had a lot of intraday volatility. So that was we rarely see that, and I think 2018 was an outlier in those in those terms. So that's my outlook and recap on the earnings there, Mark.
Yeah, those years of 2017 and 2018 back to back, an outlier in one direction to the downside, then an outlier in another direction to the upside, pretty much back to back, really does kind of muddy the waters when you're talking overall analysis for looking forward, because those two data points really just obscure so much else out there going on in the space. Speaking of what's going on out there in space, now it's time for us to turn our gaze forward, to look ahead to the year that is 2020. Mr. Cott, we will start with you, sir, give you pride of place. What do you think, as you're out there talking to the advisors out there, as you're out there hosting your show, all the other fun things you're doing in the advisor space, what do you think are going to be maybe some of the big trends, some of the big developments, the stories, the things that are really driving the attention in the options-oriented advisor space for 2020, sir?
Well, we're going into a new decade, Mark, so how about combining the year 2020 and looking at a VIX of 40? No, I didn't say that. That's not my prediction. I think we'll have muted volatility, but no, for the advisor space.
Wow. It's too late. It's been recorded, sir. You are down for a VIX of 40.
It's recorded. I'm done, Matt and Chris. I'm gonna assign that prediction to either one of you guys. No, I mean I'll start with Chris, and obviously a shout out for the folks at SWAN. I've had the good fortune of having Mark, one of Chris's colleagues, on a panel of mine this year, and just the absolute growth of what's going on in the sub-advisor space, where you have sophisticated asset managers like SWAN that are out there providing solutions and getting out to advisors who are now entertaining the idea that, look, maybe I do need some assistance on the income side, as you talked about, Mark, or Matt talked about, the fact that harder to get advisors to think about putting on hedges. But, look, I mean, advisors are out there, entertaining the idea of doing cash secured puts or putting on put spreads and, other ways to leg into, owning underlyings in their clients' portfolios. And the other thing I'd give a shout out to Matt is just that, having just finished a podcast, Mark, as you know, on fintech, another shout out goes out to our friend Tony Zhang at Options Play and Shaken Analytics. But with Matt's company and others that are providing solutions that advisors can integrate in their practice that kind of, I guess, simplify some of the complications that go along with options. Mark, you've been a leader in this for as long as I know, trying to dispel the myth that options are complicated, and they're not. And more advisors, if there are sort of these fintech solutions that are out there that can help in their daily, workload, and they could be out there, talking to clients. We know by studies that we've done at OIC and such, and we have it's a spoiler alert. We probably have another one coming up for next year. So I won't say any more than that. But we're always on the pinnacle of research at the Option Industry Council. It's really kind of uncovering the mindset of retail, institutional, and of course advisory, Mark. And I really think that 2020 is going to be a year that we do see more of the advisor community on a systematic basis start to integrate strategies, not really one-offs. I think this is going to really become a decade where advisors start to use this as a real key asset allocation tool.
Well, from your lips to the advisor's ears out there, sir. Let's go back to the Director of Risk again, Mr. Director of Risk. What do you think is really going to resonate for this space in 2020? If you like, I could give you some framework around which to work. I neglected to give that to Eric, so maybe I made his job a little bit harder. But you could predict whatever you want, what stories, what trends, what things are going to go on. Also, obviously, people like the lens of volatility. So if you want to look at it through the lens of volatility, I will say this. I just did a show with one of the senior economists from CME Group, and he came out and predicted that he thinks that looking at the end of the decade now, he's looking at decade-long volatility. He thinks the 2010s were a period of somewhat lower volatility outside of a few outliers, and he thinks the decade of the 2020s will be, quote, much, much higher from a volatility perspective. So thoughts on that? Maybe some thoughts on options volume for 2020 will more or less than this year, or maybe something else that resonates to you. Those are just a few categories, sir. But what do you think is really going to be top of mind for this space in 2020?
Well, so far I'm developing a record of predicting stuff 1 year out, but I'm not even going to try 10 years out. So since I am 2-0, I'm going to put some numbers behind some predictions here and what I think is going to happen in 2020. I think the bullishness extends into the new year for the reasons that I just said, but sometime in the spring we are going to test the 3,000 level in the SPX, so that's where the late October, November breakout was. So that's definitely going to be tested at some point, I think. That's a given. But then you're going to find in the late summer, early fall, we're going to be running into a lot more election talk. We're going to know who's running against Republican versus Democrat. And I think we're going to get a lot more earnings announcements. And we're really going to see if all these tax cuts and all this tariff trade war type stuff is actually panning out. And that will lead, there'll be some announcements, some unknown, or people aren't going to like the data, or they're not going to like how the results of the election are coming along. And then we're going to have a deeper test of the S&P 500 down to 2,700, 2,800, and that would test this year's June low. And volatility is going to be more, it's pretty much going to be like it was this year. You'll have some spikes, probably 25 level, and then you'll have the rallies, and then the quick sell-offs in volatility. Skew will do the same thing as it did. It's moving around really fast. I'll throw one more in there. Term structure, I've noticed, also is moving very fast as the front end of the volatility curve continues to flap around, where the back end remains a little bit more firm like we've seen this year, which is, I didn't say this earlier, but the longer dated options with respect to volatility have actually held very, very well in 2019. We've seen hedging in the longer term space, and when I say that, I mean more like 1 year to 2 year space, and that's because the election is coming around. So we'll see how that pans out.
Mr. Matt, same question for you, sir. Remember, this is being recorded for posterity. So Eric's already down for a 40 VIX. And what do you have in store for our listeners as the big trends, the big things that are really going to resonate in 2020?
Okay, I'm going to go out on a limb again. So I see the market, continuing to float higher. I think vol is going to come in. We might have another single-digit president for the end of 2020. I think the 252-day volatility will be slightly under 10, and I think we'll be almost 15% higher. There'll be some headwind because of a weaker dollar, and the consumer will weaken a little bit, and the defense stocks will do better than the high flyers, but I think it's going to be a little boring. You're going to have some value people come back, price to book. So my long-term stuff that I look at is price to book with a delay. It looks like this market will just continuing to go up into the coming years. So, Mark, that's a longer term prediction. I'm trying to do my decade-long prediction to keep up with the CME Economist.
Yeah, that's a hard one to really come to grips with, predicting a decade of volatility. But tell you what, I won't let you guys twist in the wind by yourselves. You didn't really have time last year for me to make a prediction, so I wanted to make sure you guys got yours in. But I'm going to go out there with you as well, because it's more fun to be out there on the edge there. And a couple of things resonate with me. First off, Chris kind of stole my thunder on the vol front, because I've been thinking about it, and I don't see a lot of things that I think really are going to systemically drive a lot more vol, or really a lot less. Maybe if I had to lean a little bit, I might say a little bit less, kind of like how maybe Matt was leaning out there, because there are some known events that could drive a little bit of volatility. Obviously, we have primary season kicking it off in the spring, and that it's probably more contentious now than it has been in a little while, so that could lead to a little bit of volatility as the front runners ebb back and forth. And of course, we have the actual election cycle itself in Q3 into Q4. But that's a known event, so that could end up being underwhelming from a volatility perspective unless we have a huge surprise. I don't think anything could really outstrip the surprise of 2016. If you want a fun listen, listeners, I recommend you go check out our live episode of Volatility Views that we did on election night back in 2016. Myself and Mr. Rhodes, formerly of the SIBO, breaking down all the volatility and some of our own surprises as things were a little bit topsy-turvy that night. That's a fun one. Maybe we'll put that out there in the feed for you again. It's already there, but we can service it again as a bit of a best of here at the end of the year. So I have a hard time outside of that really seeing huge, massive drivers for volatility. I think kind of like what Chris said, I think there'll be a few shocks. Might get us back up to that 25 level again, but I don't think we're going to stay there very long, and probably play out to something similar to this year from a vol perspective. Maybe if I had to lean either anyway, I'd say maybe a little bit less. And then overall as well for volume, I think we're in an interesting year. I don't think anything going on this coming year can really, and I hope not, because some of those developments in 2018 were pretty damaging to the market as a whole. So hopefully we don't see some of those developments like the VIX-ocalypse again that really cause a lot of problems for a lot of people and for the space. I think we could do with a little less volume if it means we're not having funds blowing out left, right, and center, and a lot of retail blowing out as well. So I think for volume next year, I think we could be on a pace similar to this year. Maybe, I'm going to say we go out on a limb and say we beat this year's volume, but we don't beat 2018. So somewhere a little bit more than this year, but a little bit less, or maybe a lot less than 2018, which was indeed a record year as well. So there you go, listeners. Some prognostications for you guys to wave in our faces a year from now. But, we're not done yet because we like you guys. We want to make sure we feature a few of you on the show here before the end of the year with a little bit of some holiday office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody, welcome to the final office hours for 2019. We love your questions. You guys send in a ton. We get to as many as we can. We actually had a few listener question paloozas this year, so hopefully you guys enjoyed that. Clearly, from your volume of questions, you did. Let's start off with this one. Actually, Eric, this is a question that came in a few shows ago, and when it came in, I thought, you know what, let's table this one, because this is a perfect question for Eric when he eventually decides to deign us with his presence again. This question came from Lambert. Maybe Lambert. Let's go with Lambert. Lambert does sound fancy. Let's go with Lambert. How's that? Lambert wants to know, is there a good place for a list of options-oriented advisors? Eric, we get questions along this line quite a bit. I know there are a few different providers out there who attempt to do something like this. Do you have any recommendations or perhaps places that Lambert here can go to find more information on this?
Lambert, I'm glad you asked this. I'm going to tell you to pour yourself a nice hot cup of eggnog coffee and either go to the Advisors Option Show, which you're listening to. Any of the content that Mr. Longo puts out is fantastic about options-oriented material. I'd also give a shout-out to the wonderful folks at Investor Services, which is optionseducation.org or 888 Options. I'd also say that any of the exchanges that I represent also have some really great information. But, we're constantly upgrading our website, and that's what our esteemed staff in Chicago and Texas is there for, is to answer your questions. But, to say to this listener of yours, Lambert, is that keep his ears open for next year. There could be some exciting things coming from the Coffee with COTT land. But I'm only going to leave that little secret out there for now, and more to come in 2020.
Oh, you're giving him a little bit of a tease. Well, let me ask you this then, maybe because a little more specificity for our friend Lambert out there who have similar questions. Because we get, like I said, we get variation on this theme all the time. Is there anything you could think of, whether it's a provider or a service? Because there are obviously directories of RIAs that people can search and put in their area and find people near them. And usually you could filter them for a little bit. But usually when it gets to options filtering, like say you want an RIA near you who does covered calls, usually most of the services I've seen don't really get that granular with it. They might lump in that advisor with an alts category. So you got to search for advisors who do alts near you, and you have to hope that person does options and isn't a managed futures guy or whatever the case may be. Do you know, or maybe can you think of, or maybe they don't exist yet, of a service that could provide any more granularity for Lambert and other listeners who are maybe looking, they like what we're talking about here, they're looking for someone near them who might do this? Can you think of anything off the top of your head that might do that, Eric?
Well, it's interesting, Mark, that Morningstar does publish a list, and of course our good friend Chris, his firm SWAN, is on that list as well. As far as a geographic focus, I do know that the larger registered investment advisory firms do sort of have their own preferred list. So if you're clearing through certain firms, whether it might be a Schwab, a Fidelity, a TD Ameritrade, etc., typically their derivative desk does have a I wouldn't say a preferred list, Mark, but a list of sub-advisors and providers that, that they would potentially recommend. As you know, and your listeners do as well, we're agnostic at OIC, so we don't make any recommendations that way. I would also mention that there are organizations out there, accredited organizations, from the Financial Planning Association to the Investment Wealth Institute to others that are constantly putting out white papers and articles that are written by option-centric advisors. So, in the long-winded answer and sort of dancing around it a little bit, Mark, I would say that it doesn't yet really exist to give you geographic recommendations, but I'd say for a person like Lambert and some other of your listeners, I think one place to look at is Morningstar, and some of the exchanges do publish the list of option-centric providers, and they can also get that from us at the optionseducation.org.
Yeah, not a bad recommendation. I think the one, maybe go to your broker as well, whoever you're executing your options trades through now. You're actually right, Eric. They may have a list of people that they know who are, fairly vetted and responsible, who have an understanding of these products, who could help you in a little bit more distinct capacity. Of course, I encourage you, again, check out some of the shows on our network. We have a few advisors who might fall into that category, including Mr. Amberson over here. He is an advisor, We don't talk about it a lot, but he is a registered RIA. So maybe if he has time amongst all of his data analytics, maybe he could lend you a hand as well. Next up, this guy's been waiting for his answer for a while here, Chris. I think he wrote in a show or two ago. This comes from Dave Martin. He wants to know very directly why are there no posts from the director of risk on SwanGlobalInvestments.com. Listeners, I've said many times, when you're not listening to this show, the SWAN website is actually a great place to go for content, white papers, research, all kinds of good stuff, including links to a fun show you may have heard of called The Advisor's Option. But as Mr. Martin points out, Mr. Director of Risk, there's a glaring hole on that website. What do you have to say here for Mr. Dave, who wants you on the website more?
So I'm usually too busy preparing for this radio show, and I just don't have the time to do it. That's the real reason. But I actually write a lot of top secret internal pieces. But I tell you what, I'll make a deal. If Mr. Dave Barton wants to come up with a couple of topics that are options related, I will be more than happy to post up something for him personally.
Well, there you go, Mr. Dave. Well done. And it's a little-known secret that Chris actually spends about, I'd say, 2 to 3 weeks prepping for this show, so that does consume a lot of his time. And I will give him an out by saying the shows that he's on this network that are on the website do kind of count as his posts on the site, and there is a lot of content there, so that's at least an hour's worth of content a month you can look at from him. If you broke it down into a word count, it would be pretty long. Look at his prediction from last year. He does go on at length sometimes when the mood strikes him. All right. Next up, we've got Samuels. This is an interesting one. We actually talked about this a bit on the Vol show this week, but I wanted to make sure, well, first off, he wrote into the show, but secondly, I wanted to make sure to get your guys' thoughts on this as well, because it's kind of an interesting topic, and we touched on it before, probably back in the wake of the VIX-ocalypse in 2018. But Samuelson wants to know, hello, AO. Well, hello to you, Mr. or Mrs. Samuelson. He says, I know you all had opinions on the demise of XIV and the short volatility trading that led to it. What are your thoughts on this potential new product? Does this thing have a chance of getting listed? He includes a link to an article that came out from Bloomberg, I believe it was last week, called The Ghost of XIV Rises. A new short vol product is in the pipeline. If you want a full overview of this product and maybe a little bit of discussion of it, check out our most recent episode of Volatility Views. We do just that. Long story short, there's a startup, which is interesting in and of itself, a startup doing this, not an established player in the financial space, which may or may not have some lingering ramifications for the future of this product. But they're attempting to replicate an XIV, which is, of course, listeners, a product that allowed you to effectively short volatility. It had a lot of, shall we say, quirks to its makeup, which we talked about many times leading up to its inevitable demise back in February of 2018. These people claim, obviously they have an axe to grind, but they claim their product will perform much better in that environment. They say their stress test showed only losing about 30% versus XIV. They also make some interesting claims about market manipulation causing the demise of XIV. I'm not sure if I'm on board with all that stuff. Also, some other things like rebalancing it much more frequently than just end of day instead of 15-minute VWAP effectively out there. So a lot of interesting stuff. Clearly, this is a product you guys have written in about this category of product many times over the past year and a half. So clearly, this is a product that there is demand for. and Mr. and Mrs. Samuelson showing that that's the case as well. Maybe, Matt, we'll start with you. What are your thoughts? Did you see this article? And what are your thoughts on perhaps the rebirth, the return of XIV?
I'm very skeptical. I'm on record on the show many times, even before the Feb apocalypse, that these products are not recommended by me. We have some clients and have had over the years that just really dive in and read all the prospectus and understand exactly what these things are doing, when they're going to work, when they're not going to work, when they're going to roll, people taking the other side. It's just, there's just so much going on that I have no idea about. Then, I'll stick to the license plate, the New Hampshire license plate, VIX puts. That's about how I'll play this, Mark.
Yeah, this is a very divisive issue. I know in the immediate wake of the Febocalypse, and even in the months and years since, a lot of people have come out and said these products maybe never should have existed, certainly should have been handled better. Maybe some of the brokers should have done a lot better job of educating their users on what exactly they were trading. I mean, I've said many times, Matt obviously did as well, but on the shows like VolViews and others leading up to that event, that's their prospectus on that fund was one of the scariest ones I'd ever seen, and it also had one of the best euphemisms of the quote-unquote acceleration event that they said could happen at any moment with that fund, which we did see happen, of course, in the Febocalypse. Mr. Director of Risk, what are your thoughts on perhaps the return of an XIV-like product and the prospect of a lot of retail once again flocking into the short vol trade, sir?
So products are always going to continuously be listed and delisted. If they don't do it, someone else is going to do it. It does sound like on the surface they are trying to correct some of the weaknesses of the original XIV product, but then, until we get the prospectus and we can tear this thing apart, again, these products, there's always an appetite because people forget. People forget the dot-com bubble. People forget the financial crisis already, and when you start hearing more talk of why do I need a put, why do I need a hedge, they forgot what happened 10 years ago. And so there's always going to be these unknowns in the system. Regulations change. Every time there's a new product listed, it dominoes through the financial markets. Back in the day, when there was just the VIX and that was it, and there weren't all these volatility products, we knew what vol did, and it was steady for the most part. And nowadays, you've got so many different vol products, and every time a new one gets listed, it does reverberate through the system. And I think that's the challenge with volatility today. Is it's just there's so much pressure one way and the other way, and that's why we're having these huge swings in volatility, and to the downside and to the upside when these events happen. So, again, I don't know what the end result will be, but anytime you're short volatility, especially if you're retail, it is something that you need to be definitely aware of what could happen, and I kind of side with Matt a little bit on this one as well.
All right, we don't get Eric on too often because I'm going to combine two questions that are clearly for him at the end here. First one comes from B. Ward. He wants to know if any plans from the OIC team to revisit. He wrote straddle, but I think he means the collar study. To revisit their collar study, and great show. Thank you for that, B. Ward. And then L. Idolo wants to know, how do I gain access to the study of advisors' use cases for options mentioned on the program? So I'm guessing the first one, Eric, is he wants to know if you're going to revisit that great collar study you guys did, which we still talk about here on the show. And the second one, I'm assuming he wants to know about the Cerulli study, how he can get access to that. So what do you have for our two listeners here, B. Ward and L. Idolo, sir?
Well, B. Ward, thank you for bringing that up. And we always encourage our participants, whether it's retail institutional advisors, to bring us ideas for research and stuff. And yes, we were very proud of that collar study. And I will take back your comments and your suggestions there, B. Ward, about looking into the collar study and seeing if that we'll see another version of that sometime soon. But as I mentioned earlier in this discussion, there will be a research piece that will come out in 2020, but I'm going to leave that for the powers that be in Chicago. More information to come after the new year on that. And then for Joe asking, I guess it is Joe, is that correct there, Mark, that was asking the question about the Cerulli study?
It was L. Idolo. So apparently the Idol is writing to you.
The Idol, okay. Well, the Cerulli study is still available at optionseducation.org. And there is discussions going on behind the scenes. We're getting close to doing another iteration on that quant study we're in the throes right now of talking about it, and so hopefully when I am on in 2020 with Mark and Chris and Matt, I'll be mentioning some discussions about a new Cerulli or an updated Cerulli study, but there's still legs, no pun intended, on that quantitative research that was introduced in 2017. So if your listeners cannot find it, they could surely reach us at 888 Options.
All right, that music means we'll have to leave it there for 2019. What a fun show this was. We look back at our predictions from 2018 for 2019. We look back at the big trends and developments and stories for 2019. Then we looked ahead to 2020 so you guys can all hold those against us in about a year's time. But before we go, let's go back around the horn, see what everyone else is working on that may interest you. Let's start in the land of all things ORATs. Mr. Matt, if folks are intrigued, they want to learn more about what you guys are doing, maybe you want to leave them a little bit of a hint, a little bit of a tease of what you have up your sleeve for 2020. Now is the time, sir. The floor is yours. Uh-oh, you pulled an Andrew, sir.
Oh, I had to do it, didn't I?
Yes, you couldn't end
Giovanni.
You couldn't end the year without doing it one more time, sir.
I stood next to him on the floor for 10 years, so that happens sometimes. Come on over to orats.com. We're introducing a new graph of all of our data, all of our contangos, and you could do relationships between historical and implied volatilities and all kinds of stuff. Also have some machine learning studies going on with volatility indicators and technical indicators. And those, of course, will all work with our scanner and implementation. We are working with advisors on sending out orders and allocating them to various accounts. So we're very active in the advisor space. So it's an exciting new year coming, and Advisors Options is going to be the place to be in 2020, Mark.
That it is. Listeners, in the meantime, while you're waiting for our next episode, head on over to orats.com. That's ORATS.com for all that good stuff. Give them a follow over there on the Twitters as well, at OptionRats. It's an easy handle to remember. One of the more memorable ones out there. All right, and Mr. Director of Risk, same question for you. What is up your sleeves over there at SWAN for 2020? Any interesting 10th box events, papers, research, things? What can people look forward to from SWAN in the coming year, sir?
Well, we're wrapping up the year, looking forward to a brand new 2020. We do have a new piece out that I did not write entitled Putting Brexit in Perspective. Takes a look at the volatility we had back in 2016 when Brexit was introduced and its impact since then for managing risk. And you can get all that material at swanglobalinvestments.com.
And look forward to a forthcoming extensive article series from the Director of Risk himself. I think somewhere around 10,000 words apiece coming soon on SwanGlobalInvestments.com, detailing all of the risk metrics that go into volatility and how you can break them down for yourself. There you go, Chris. I just gave you some extra homework for the show. And last but not least, Mr. Cott, you gave us some hints. You gave us some teases. You are also in the process of hosting your own program. You also have all your seminars and events and initiatives and research coming in the land of OIC. So if you want to leave our audience a little bit of a hint of maybe what they can look forward to on your show, what they're looking forward to coming from OIC in 2020, now is the time, sir. The floor is yours.
Well, thank you, Mark. I will wish a Merry Christmas, Happy Hanukkah, Happy Kwanzaa, and for anybody that is a Seinfeld fan, Happy Festivus. But more importantly, we do have one more podcast for Coffee with Cott. I'd be remiss if I didn't thank Mark, you and your team, for all the help that you've given OIC to launch this early in 2019. We've had tremendous results with the OIC's Coffee with Cott show. And then I'm excited for next year because we will be in the land of Chris and Puerto Rico for the OIC conference, which is a little earlier this year in April 2020. I am wishing a happy holiday, of course, to Matt and his family, to Chris and all the SWAN folks, and Mark, to everyone there in Chicago. Please look on the optionseducation.org site for our webinars, our programs, and all the other content that we will be delivering to our retail, institutional, and advisor community going forward.
There you go. Optionseducation.org is the place to go for all those studies you guys are asking about and all that access to all that data. Optionseducation.org is the place to go. Click on that Advisors tab, and you have to sign in. Once you do that, you have access to all that good stuff. And, of course, since you're listening to this, you like podcasts, maybe with a advisor-oriented tinge to them, in which case, if you haven't done so already, make sure you check out Coffee with Cott. If you want a whole hour of this guy in your ears, you got it there. Coffee with Cott. You can find it on this network or wherever you find your finer podcast programs if you prefer to subscribe individually. We don't judge. As long as you listen, we love you guys. We love all of our listeners. We want to thank all of you out there for making 2019 such a great year. Your questions, your comments, your feedback. Keep all that coming, and we'll see you back here again for more great episodes in 2020.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.